Investing in the stock market can feel like walking a tightrope, thrilling but risky. The good news: with the right strategies, you can reduce your risk and make investing less stressful and more rewarding. Let's dive into 5 simple but effective ways to protect your money while still growing your wealth. First up is diversification. Imagine putting all your eggs in one basket. Risky, right? The same goes for your investments. Spread your money across different sectors, industries, and even asset classes like bonds or real estate. This way, if one area takes a hit, the others can help cushion the blow. Knowledge is your best defense against risk. Before investing, research the companies you're considering. Look at their financial health, past performance, and industry trends. The more you know, the better decisions you'll make. Next, use stop-loss orders. These are automatic triggers that sell a stock if its price falls below a certain level. Think of it as your safety net. It helps limit losses if the market takes an unexpected turn. Ever heard of FOMO, fear of missing out? Chasing trends might seem exciting, but it's often a recipe for disaster. Instead, stick to your investment plan and focus on long-term growth. Remember, slow and steady wins the race. Finally, don't forget to rebalance. Over time, some investments will grow faster than others, shifting your portfolio's balance. Rebalancing ensures you maintain your desired risk level by realigning your investments to match your goals. And there you have it, 5 simple ways to reduce risk in the stock market. Diversify, research, set stop losses, avoid chasing trends, and rebalance regularly. These steps won't just protect your investments. They'll also give you peace of mind and a clearer path to financial success. If you found these tips helpful, hit the like button and subscribe for more practical investing advice. Have questions or your own strategies? Drop them in the comments below. I'd love to hear from you. Until next time, invest smart and stay safe.